capital expenditures actually have been very, very strong, and so has capital repatriation from abroad. In the first 3 months after the tax bill alone, $300 billion was brought back from overseas. CapEx is very strong, employment is very strong, unemployment is so low that we now have more jobs available than there are total unemployed people, the first time in history. So we don't see any signs right now of any weakening in the economy. We think the June quarter will be a very, very strong quarter, well above 3% and maybe even pushing closer to a 4% annualized number. So I think all these claims about the sky is falling are at best premature and probably quite inaccurate.
To that point, though, Mr. Ross, I mean, yes, the data has held up, but the stock market has not. From the highs in January, the S&P 500 is down 5%. So as a forward-looking mechanism, the stock market is anticipating trouble ahead. Is the administration not concerned about that at all? We've seen an increase in volatility as well in the past few weeks.
Well, the stock market hates uncertainty. In fact, business hates uncertainty. Everybody hates uncertainty. And the worst fear is the fear of the unknown. But eventually, the arithmetic prevails, facts prevail, and fears either are realized or they go away.
But what's the number, Wilbur? That's the question with Melissa that she's asked. I might have asked. I'm not sure how much of it is directly discounting trade wars, but there must be. I mean, is there a notion that you've got 40% to work with on the gains, or 35% since the election, and you won't be? I mean, if we got to 20% down from the highs, would you at that point think maybe we're inflicting some damage? Would the stock market be telling you something at that point?
Well, first of all, the stock market is still well up from where it was before the president came in.
Let's say it was down. Let's say it was 20% off. Let's say it went 20% off the highs. If this continues,
yeah, there's no bright line level of the stock market that's going to change policy. The president is trying to fix long-term problems that should have been dealt with long time ago, weren't. And there obviously is going to be some pulling and tugging as we try to deal with very serious problems. Right. So there will be some hiccups along the way.
So there is no bright line. Is there a dull line?
The numbers are very small.
I guess investors want to know whether or not the administration will pursue this at all costs, or if there is a line in the sand, even if it's not a bright line, at which the administration will say, you know what, this is not worth it. Investors want to know if the administration has basically got a put under this market when it comes to these trade wars and the impact on the markets.
Well, the last thing we're going to do is to announce that there's a certain level in the stock market
but you got it in your mind?
Policy. That's not
That's
not how you make policy. You have to make policy based on what's fundamentally good for the economy, what's fundamentally good for the long term. You can't deal just with day-to-day stock market fluctuations.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.